Welcome to Breakout Investors. Today we are speaking with the management of Perma-Fix Environmental Services, ticker PESI, specifically the company CEO Mark Duff. Joining me on today's call is Breakout Investor Aaron Warwick. This call is being recorded on November 17th, 2021, and will be distributed via the Breakout Investor channel on YouTube and via our podcasting network. Look for Breakout Investor content wherever you subscribe to podcast. We are on Apple, Spotify, Audible, and most other platforms. Supporting materials for today's discussion will be posted on the Breakout Investor Collaboration app, available on the app stores and at app.breakoutinvestors.com. The application and much of the research content is free. After registering or logging in, use the search bar at the top right of any page, type in the ticker, and the results will give you a link to the research post for this presentation into other discussion and research related to today's company. Those of you already on the Breakout Investor platform can share your questions for the company using the Discuss tab in Aaron's breakout room. So let's get started with me handing the call over to Aaron.
Thank you for that, Josh. Very happy to have Mr. Duff with us today. I've been looking into Perma-Fix. Again, PESI is the ticker symbol. Very excited about what they've got going on. Anxious to hear from him, and then we've got some questions for him after that. But before he begins, I'd like to make a disclosure here. I want to remind everyone that certain statements contained within this call may be deemed forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995 and may include certain non-GAAP financial measures. All statements on this call, other than a statement of historical fact, are forward-looking statements that are subject to known and unknown risks, uncertainties, and other factors, which could cause actual results and performance of the company to differ materially from such statements. These risks and uncertainties are detailed in the company's filings with the United States Securities and Exchange Commission, and the company makes no commitment to disclose any revisions to forward-looking statements or any facts, events, or circumstances after the date hereof that bear upon forward-looking statements. So with that out of the way, we'll first hear from Mark Duff, what he wants to present to us about the company, and then I have a number of questions that I'd like to get into as well, specifically around some of the future opportunities that I think that they've already talked about on their earnings calls, but want to make sure that our community is well aware of and acquainted with. So Mark, thank you for joining us today, and please go ahead and take it over.
All right, Aaron. Well, it's certainly my pleasure to join you, and always flattered by the request to find out more about our company. We're really excited, as you mentioned, about our company as well. We've been through some tough times with COVID, and are starting to, as I mentioned on the quarterly call, really starting to see things turn around finally in the latter part of Q3, and going to see some better numbers ahead. So I think we made it through. It did have an impact on us in a couple of different ways, but we can talk about that after I talk a little bit about the company, just to make sure people are up to speed on who we are and what we do. We are a waste management company and a nuclear services company. We have two different segments, one for each one of those. In other words, we treat some of the world's most hazardous and complex radioactive and hazardous waste. We do most of that in our treatment plants that we have. In addition to that, our other segment is our nuclear services segment, and that's work that we do in the field, cleaning up radioactive and hazardous materials, either from production-oriented causes or a general cleanup from incidents that have occurred and from the government's legacy stemming back to the Manhattan Project. So both of those kind of make up our company. Our revenue is about 40% treatment, about 60% services. And we'll talk a little bit more about each one of those moving forward. The company was founded about 30 years ago by Dr. Lou Centofanti, who's still with the company, and it's on the board. He's also an active employee in the company, and grew from just doing some hazardous material stabilization and adding the services group on around 2012, and to now about 300 employees, and becoming the recognized leader in the country for nuclear waste treatment services. We don't have a lot of competition in our field. There's really only one other company, Energy Solutions, who's privately held, that has a landfill in Utah and also has a treatment plant in Oak Ridge, Tennessee, right near one of ours. and we kind of run neck and neck with them. We actually do support each other from time to time. We ship waste to their landfill, and from time to time we'll take waste from them as well. But generally we're battling through most of this. There's a couple other competitors here and there, depending on the kind of waste we're dealing with and what might be required. But generally, it's a very limited field. People ask me all the time, well, if you're the only one that can take these wastes, what's the limit on what you can charge? And in some cases, we can charge very dramatic margins. But most of the time, the answer to that question is, if you charge too much, people put the waste in storage and save it for later and make take the expense later, or put it in long-term stable form. So we need to be right in the middle where we're a cost benefit to take the waste off their hands, dispose of it safely from a safety and environmental perspective, and largely because of regulatory perspectives as well. But we do have to be good value to our clients. The management team is, again, I'm the CEO. We do have an executive vice president for both, one for nuclear services and one for the treatment facilities as well. They're very focused on growing their organizations. Each one has over 30, nearly 40 years experience. And we do have a very strong management team. Very happy how we've changed over the years. We've also built up a board of directors that I'm very proud of as well. Key figures in our industry, leaders in the military, as well as in industry. And they have a very strong role with our company. And we lean on them a lot for a lot of different initiatives that we have underway. Our primary client is Department of Energy. Department of Energy manages most of the country's legacy cleanup issues and projects, because most of those projects stem from the Manhattan Project and from different types of nuclear activities that have happened or occurred in the last 60 years, but primarily associated with the manufacturing of nuclear materials, mostly for weapons, that have occurred across their DOE sites over the last 30 or 40, 50 years. And while they're making progress all the time, interestingly enough, the Department of Energy within the Environmental Management Division of DOE has about a $7.5 billion a year budget. And while they spend $7.5 billion on cleanup around the country, that legacy or the liability associated with the DOE cleanup program increases every year. So if you look at how much it goes up, it's mostly because it gets harder and harder to clean things up, but the cost for doing that also goes up. And waste spreads, radionuclides spread, and increase the waste volumes each year. So right now, DOE estimates their liability to be the third largest liability in the federal government, behind the pension program and the deficit. Their cleanup liability is about $512 billion, I think is the last number they threw out, which they publish every year in a GAO report. So $512 billion over the next several hundred years. So it's a good market. It's going to be around a long time. A lot of people don't know about it, but they basically cleaned up. DOE's cleaned up some of the easier things. They've done some tough ones, but the toughest remain, which largely focuses on some of the waste at Hanford, in Oak Ridge, Tennessee, as well as in Savannah River. And there's a few other sites as well that have some pretty nasty stuff, but those are the primary budget focuses for the Environmental Management Division. We also work for the Department of Defense. Right now, we're seeing great growth within the U.S. Navy as the Navy transitions some of their old fleet out, particularly the fleet that had nuclear propulsion components to it, both subs and ships. And they're starting to outsource that decommissioning for the first time ever, due to the fact that they're just having a tough time finding skilled personnel to build ships. They've decided, very astutely, in my opinion, to take those folks that are astute at building ships and have them focus on building them and outsourcing the decommissioning and demolition and tearing apart of ships, which is what we do. So the Navy has announced in a GAO report recently that they will be decommissioning, I believe it's 48 ships over the next 5 years. About 25% of those are nuclear. And that's a big backlog of a market for the decommissioning side of the house. All of that generates lots of waste, which excites us, and provides opportunities to provide value in that decommissioning process. We also are starting to really get integrated into the commercial reactor demolition decommissioning process, which is just now starting to move as an industry. There's only been a few reactors that have been decommissioned and demolition. They're starting to see just about one a year on average come offline, get decommissioned, go through the decommissioning process where they're removing the fuel, moving the reactor, and beginning to do the demolition part of tearing things down and disposing of the components that are contaminated. We're playing a big role in that right now, or trying to, where we're looking at assisting several firms in some of the plants that are coming down in the next 2 or 3 years to do the decontamination of the large components on site, as well as on the actual reactor site, also at our facilities when they can be shipped, which we can do much faster because we have the experience in the facilities to do that. So lots of open market for the commercial side of the world of the business, and we see ourselves playing a big role in that in the future. So in addition to those three, the DOE, the DoD, and the commercial, the last component of our market is international. And the international market is growing extremely rapidly for us. It's one of our most exciting components. We just received some waste from Germany for the first time. We're also getting it from Italy. We have in the past from UK, and we're hopeful for some shipments from Mexico as well. We also get it from Canada. So lots of opportunities for growth there. We have some of our treatment technologies that are the only ones in the world that can treat some of the waste that are generated. And what we'll do for international clients is we'll treat the waste and then send it back in a stable waste form with a significant volume reduction, which is somewhere between 70 and 90% volume reduction. So they'll get back the waste exactly what they sent to us, and it'll be in a form that can be stabilized and stored long-term at minimal cost. And because it's so difficult to license and permit facilities, let alone build the technology and some of the proprietary technology that we have, it's definitely cheaper for a client in Europe to pay the high shipping costs and not make the investment in the facilities itself. So it's a general overview of the markets. We are, again, about 65 to 70% reliant on the Department of Energy, just because they have control of most of the radioactive waste by volume in the country. So how do we do that? As I mentioned, we have two different business segments. The first one is waste treatment. We have 4 different waste treatment plants. Today I'm calling from our plant out in Richland, Washington, which we call Perma-Fix Northwest. This is our flagship plant. It's got 2 incinerators at it, as well as the vitrification unit, which turns certain types of waste into glass, which is the most stable waste form for disposal. We also have numerous other processes out here with large containment facilities that can take very, very hazardous materials, radiological materials, in a very enclosed environment, controlled environment, where it allows us to dismantle them and take them apart, our size, reduce them very safely. And we have the workforce to do that out here in Washington State and Southeast Washington State. It's located right next door to the Hanford Site, which is by far the largest site within the DOE, which takes up almost 33% of their annual budget. So there's lots of opportunities out here for us, and we'll talk about those, I'm assuming, in a few minutes when Aaron asks a few questions about that. We also have 2 plants in East Tennessee, one in Kingston, which is right outside Oak Ridge, and the other one in Oak Ridge. The one in Kingston's been around a long time. It also has an incinerator. It has an incinerator that will allow us to actually generate electricity when we run it. So it runs it. It takes the heat that we use to destroy waste, feeds a steam generator, and we can put power back on the grid, which is very important for carbon footprint reduction and ERG contribution in these days. The other facility in Oak Ridge was what we call the EWOC facility. We lease that one right now, but we are doing some work to it to potentially either buy it or buy something similar to it. And that facility is focused on transloading, which means you take waste, we receive waste, we repackage it and load it on a rail car to ship out west for disposal. But we also do dismantling of large components, and a number of other processes includes sorting and segging waste, so that we minimize the cost for disposal. And our last facility is in Gainesville, Florida, and it's been around a long time as well. It focuses largely on hazardous waste. We take a lot of the hazardous waste in the state of Florida, the household hazardous waste, from different types of campaigns that you've probably seen in your local area, where people bring their paints and their thinner and other types of things in the trunk of their car and dispose of them. Well, in Florida, we take most of those waste across the state, through the counties, and through clients we have all around, and consolidate them for treatment and disposal. In addition to that, we also have radioactive licenses as well, and we do several different types of technologies for different types of radioactive waste. We are in the process of expanding that plant, adding a new system capability, which is called vacuum thermal desorption, or VTD, and that very aggressively focuses on organic radioactive waste, and is super efficient. We've already sold a backlog of several $1 million of inventory to run through that facility once it's up and running, which will be right now, it looks like the end of the first quarter. So it's one of our expansion technologies. On the waste, or excuse me, on the nuclear service side of the house, completely shifting gears, we do, as I mentioned before, projects in the field, and cleaning everything up from contamination in a hospital to knocking buildings down that are radioactively contaminated, as well as I mentioned, decommissioning and deconning equipment and ships and those types of things. We're seeing the greatest growth in revenue in the services segment. Unfortunately for us, there's only a certain amount of radioactive waste generated each year through operations and types of generation. The rest is through cleanup. In the cleanup side of the house, there's an enormous market, much bigger, and grows each year. So as far as revenue growth, we do very well in nuclear services, and have seen some rapid growth over the years before COVID hit. Now, from a margin perspective, I get the question most of the time is how the margins line up on the waste treatment side, because we have so much technology and so much proprietary information, or proprietary systems, as well as innovative approaches. We do much better. Plus, we have the assets, where we're looking at a gross margin at about 70%. On the services side, because we do have lots of competition, and we're not applying as much technology, it's going to be closer to 20-25%. Or a little better, depending on the project. So greater revenue potential in services, lower margin. We're seeing this growth across, as I mentioned, the Department of Energy, but also in the DoD side of the house, where we recently won a number of contracts, not only with the Navy, but with the Corps of Engineers. And as I mentioned, that's where we'll see the commercial side as well. So it takes a lot more labor. We're mobilizing the field. We're usually on travel for long periods of time, like a year or so, but very sustainable. And the services side of the house provides a steady income, whereas on the waste side of the house, they're usually small tranches of waste shipped, in a few trucks here and there. So it's a little bit more what we call lumpier as far as revenue generation goes. So we look for a good long backlog on the service side of the house. We've had a pretty good Q3, where we've added an additional $50 million in backlog revenue through new services that we've won over the last 3 or 4 months, and we continue to win work and bid work on a rapid basis on the nuclear services side of the house. So lots of growth initiatives underway on the treatment side. We're adding new technology. We've just expanded one of our facilities in Oak Ridge as well, where we've increased our footprint and our storage capabilities, so that we can expand some of our treatment capabilities. And what that allows us to do is bring on more waste at one time, and build our backlog up a little better. I mentioned the VTD down at Perma-Fix in Florida, and we've done a number of upgrades out here in Richland as well, that broaden our capabilities and what we can treat, increase efficiencies, and provide the opportunity to grow at a pretty good pace overall for the waste treatment. On the nuclear services side of the house, we typically track that by what we have in pipeline, in other words, what we bid. We've had hundreds of millions of dollars of bid this past year. A lot of those were in a few large contracts that have not yet been awarded. We're optimistic about those, but there is lots of competition. So we're very careful not to put that in our backlog, and those will be plus ups for us. But this year we'll see some growth over 2021, and in 22 we should see good growth with DOE coming back into the office and increasing the procurements and task orders that we're expecting over the next several months, so that we can be in the field in the spring. So good growth on both sides of that coming in 2022. We're hopeful that 22 will look a lot like 2020 did for us, and then just take a little bit of a dip in revenue and profitability in 21. So that's kind of my typical run through. Aaron, I'm not sure if that hit most of your marks, or if there's a couple questions that you have that I can address to give you a little more clarity on what's going on.
Yeah, appreciate it. Very informative, but I definitely do have some more questions and some things I want to try to maybe tease out that you've alluded to elsewhere. One of the things I guess I'll just start with, you've talked about recovering from COVID-19, and obviously that's slower given a lot of the governmental work that you do and how the government's been slower to come back to work versus, private industry. But one of the things I wonder, so you in 2020, what was the impact of COVID there? Because even then you still had revenue growth from, it was somewhere below 80 million in 2019 to over 100 million in 2020. So maybe you could just talk about why there was a delay there, if there was, or why 2020 was still so high, even with COVID.
Yeah, 2020 was high because we had a very solid backlog. And we were growing really rapidly. If you look at our revenue in 18 and 19, we were going up, and we had one very large project cleaning up a hospital in Seattle that carried over through 2020. Okay. And we also had some work in Canada that did as well. So on the services side of the house, it was a lot of carryover, and we also were able to burn through. As I mentioned, I didn't mention, but we have typically about $9 or $10 million for each quarter of waste in inventory. So waste to be treated. We burned through that, but both those years in the second half of 2020, as well as all through this year so far, we've been running about 40% down on waste receipts. So that's just started to pick up this quarter. But it's been a pretty constant 40% off what we normally see each quarter since the pandemic hit. So in other words, people just aren't generating as much waste as usual and not shipping as much.
Sure, that makes sense. But it sounds like it's starting to get back to normal. And if I'm hearing you correctly, you would expect 2022 in terms of revenue to be more in line with 2020. Or
exactly.
2020.
Exactly.
Okay.
It was very close.
Yeah, sure. And then, another thing I wanted to touch on, you kind of mentioned this, someone asked about it on the last call, but I wanted to see what you had to say here. It sounds like, you've been getting, you said, a big influx of interest from Germany, Italy, UK. So it sounds like there's some international opportunities out there. Could you maybe comment more on that?
Sure. That's one reason why I'm actually in Richland this week. We had a contingent from Germany, Italy, and Slovakia and UK here all week, in Oak Ridge last week, and then we came out over the weekend here, looking at our facilities, defining what waste they have in storage over there to ship over here, and looks like we'll be able to provide some value to them. So hopefully we'll start seeing that waste really get sustainable shipments in Q1 and Q2 of the next year. And what it comes down to is there just isn't the availability of facilities like we have over there, and there's a lot of value in treating their waste and putting it into a stable form that's much, much cheaper to store than what they have to as just a raw waste. So
did you say you could get it down to like 90% by like 90% cut?
In some cases, yeah. The first couple we've gotten from Germany, there was a lot of glass in it, and glass doesn't size reduce very well. So that was more like 70%. But some of the waste that we're planning on getting, will have more liquids in it, and liquid waste burns down very well. And we can get above 90. In fact, there's some waste we expect to get close to 100, where we won't be shipping anything back. So yeah, it just depends on the kinds of waste. But it's taken some traction. There's a lot of trust that has to be built, and we've worked on this for many years now. And now we're starting to get a good flow of it. I think it's going to snowball, and we're getting a lot of value out of this.
Good deal. And it sounds like, in terms of revenue wise, you had said on that call last week that you have some big bids in the $20 million range that were outstanding from Europe. Is that accurate?
We do. We have one in Italy and two other ones. And those should be awarded in 2022. They move very, very, very slowly in Europe, and on everything they do associated with environmental work. And we've been chasing, for example, the one in Italy, we've been literally bidding on it for almost 10 years. And it looks like it's finally now going to move forward. So we're very cautious as to how we count on that. But it does look like they're moving. And the German waste is not government, it's commercial. And we're expecting that to move rapidly because we're providing so much value to them. The Italy waste is a government or European thing. So it's through the EU. So they vary on timing, but they're big jobs and precedent-setting jobs that will allow us to leverage those for future work as well.
Right. And then could you maybe explain to us the MATOC contracts?
Sure.
And for those that don't know, those are the acronym there is multi-award task order contracts, but maybe you could just explain the nature of those contracts. You said you have about a dozen of those or so now. So if you could just explain that to people.
Sure. And the MATOC is a vehicle the government uses to kind of expedite and take some of the pain out of procurement, particularly for environmental type of work. And what they'll do is they'll do a MATOC for a region typically, and they'll have everyone in the business bid on them, and they'll pick the top 4 or 5. Then you're pre-qualified, and then all they have to do after that is do a task order with a specific scope of work, and you just provide a cost basically, or a technical approach and a cost. Everything else has been approved, and they can move pretty rapidly. And you do that also if there's some uncertainty with their budgets. So they always say there's no guarantee, they're going to get the budget for this project this year. But they typically do it for a program, so they know there's going to be some money coming through it, and they'll need to do rapid bids. So, for example, the Army has a program called the Facility Reduction Program, the FRP, where they tear down old buildings. And the Army has long had a policy that they have to, before they build anything new, they have to tear down equal amount of legacy space. Because they have so many old buildings all over the place. So what they do is they break the country up into 5 regions. They funded it about $100 billion for each region over the next 5 years, and they'll award 4, 5, 6 contracts in each one of those regions. And we were fortunate enough to be awarded one for each region. So we're in all 5 regions. Each one, as I said, is 95 billion. Million. Billion, 95 million. Yeah, I wish it was billion.
I was trying to buy after hours when you said
that. Yeah. So those are the kinds of things, and we won a whole lot of those. We won some with the Navy as well, both on East and West Coast. We've won some with DOE, some as prime, some as sub. We won one with EPA to do abandoned uranium mines with Jacobs Engineering and a company called Arrowhead Environmental. So we have those backed up, and those are all kind of getting momentum and awarded here over the last 18 months, just during COVID. And we're optimistic that we'll start to see some funding coming through those MATOCs in Q1 and Q2, which will help support a busy field season in 2022. So it's the kind of thing where you may never see anything through them, and that happens from time to time. Most of the time you see opportunities and can get some revenue through those. So we're very cautious, again, not to put those in our plan, but do see that as plus up opportunities for us. And we're optimistic because we have so many of them that we'll be able to get some good revenue increases from that.
And so you're saying that each of those for the Corps of Engineer, that facility reduction program, each of those could be up to
95
million? Wow.
95 million, yeah, over 5 years. So yeah. So
Okay, over 5 years. Okay.
yeah.
And then what about that one with the EPA and the Navajo Nation settlement that you had just mentioned? There was something on the call mentioned about
that's
$220 million, but I don't know if that's like all that 220 million is your potential, or if that's just,
that's for there's 3 teams. We have a big chunk of that work on our team, and it's valued at 225 million. I want to say it was a 3-year contract, but I'd have to check on that. It may be 4, but that's an important precedent program, because it's just now getting rolling. There's hundreds of abandoned uranium mines in the west, southwest, between Arizona and New Mexico, and this is just to address a few dozen of them over the next several years, and it's funded through the EPA they've already done the characterization on several of them to tee them up for actual remediation. Our job will be to go in and remediate them. And again, since it's a radiological waste form, we have particular strength in that, and our team is very strong as well. So we're optimistic that once that gets rolling, we'll be in the field working on the abandoned uranium mine program for a long time, for decades, as they go through cleaning those things up. And it's an important program that hasn't been rolling, or has never gotten rolling overall, and it's politically important as well as environmentally, and we're optimistic that 2022 will be a good year to get that thing rolling.
Good deal. I want to maybe transition over to this submarine decommissioning, because that sounds like a huge tailwind for you guys. So it sounds like that you've secured one of those ships, and it's for a $40 million revenue deal. But is that accurate?
That's correct. Yeah, that's correct.
And then on the call, it seems like you guys got into more detail there in the Q&A, and it sounds like there's at least a dozen other ships that could run maybe in the $100 to $150 million revenue range, because the one that you're doing now, I guess, was not as.
It was a smaller one. Yeah.
Yeah.
That's correct. That's correct. There's as I mentioned in the GAO report, there is a good backlog, and there's a couple of $1 billion opportunities coming up the next 4 years with 2 different aircraft carriers that are to be outsourced, the Nimitz and the Enterprise, and those are obviously the big targets. But the other 12 ships are kind of between now and then. So our goal has been to capture as many of those as we can. We'll likely team for some of the aircraft carriers because that's just such a big chunk. We'll team with a big company, but there's only a couple companies in this business, and we've seen a very limited competition. So we're optimistic that this is kind of the 3rd ship that's been outsourced. A company called Aptum has gotten the first 2, and we're thrilled to get this one and just kind of get on the page as far as the Navy getting used to us doing them, perform very well, so that we can be in play for the big ones and the rest of them when they come out. So it is a completely new market. Wasn't here 3 years ago, 4 years ago, and it takes a real skill in regards to the radiological environment that you're working in on a ship to do decontamination. And at the same time, what makes it extra complicated is you have to understand the architecture of the ship, so you don't destroy it as you're cleaning it up and cutting things out. You don't want to cut a hole in the side of the hull and find your ship that you're cleaning up at the bottom of the harbor. Right. So you have teaming partners, which we have very, very mature and established architect firms, ship architecture firms, as well as other ship repair firms on our team, and they're working hand in hand with us on the ship as we haven't actually moved onto the ship yet. We're still preparing, but so it's with the team partners that we have, we're optimistic that we'll be very successful on this first ship and see many more after that.
And in addition to the dozen or so that are higher dollar, the nuclear ones, it sounds like there's probably a couple dozen of smaller ones that would be.
There are. They're not necessarily nuclear. Some of the smaller, some of the other ones, but they all still require the same type of work, and it's a good backlog as the Navy replenishes and refurbishes their fleet.
Yeah. Yeah. And a lot of us, I imagine, on this call are familiar with Tech Precision, another name that our community follows, and we're following them in terms of building the new submarines. And so it sounds like they have to decommission these to make room for the
That's exactly right. They scrap them and use the scrap for the new ones. But that's exactly what it comes down to, Aaron, is that there's only so much space for storing these things, and more importantly for the Navy, for maintaining them, either at Puget Sound or at Norfolk Naval Shipyard. And there's other locations too, but those are the primarily ones where they're doing maintenance. So then you get the old ones out of the way. I would predict that they will be looking for more and more privatization or commercialization. So getting to the point where they say, okay, you guys take this ship and you decon it on your own facility, your own dock, get it out of here, so that we can maintain these other ones. We see it going in that direction, which means we're going to have to team with some folks to do that. We see that the market going in that direction.
Sure. What is, I mean, you mentioned there's really limited competition right now, and I can only imagine it would be, how long would it take a company to get up to speed, like getting permits and all that stuff, and the technical know-how to even come into that?
Yeah,
try to compete with you.
It is it's a very astute comment, Aaron. It is the big uphill battle, and to find qualified technicians that will do that work, that have the experience dealing with radiological contamination, is difficult. And it just so happens that that's what we've been doing most of our careers, is those types of projects. So we have a good database of people that mobilize and are willing to live on the road and do this kind of work for very long hours. They're good at it. So that's really what it takes. This is a real human capital asset kind of a project, but something that's exactly what we do. And we have a very large bench of certified health physicists, which are very hard to find. They're good leaders, and they do the calculations and the technology associated with identifying and mapping the radiological contamination, so that you know where to clean and when you're done, and then you can certify it that it's clean, and what we call free release it. So it is a long process. It's slow, it's painful, but for the guys that we have to do that, they like their jobs, and we have really good teams that have been together a long time.
Good deal. I guess the final kind of thing I wanted to focus on is of course the Hanford Site. Huge opportunity there, it seems. Could you just maybe give some people just a brief background on what the Hanford Site is, and how you are possibly going to be involved in that?
Sure. Hanford Site, as I mentioned, is kind of the flagship site for DOE in regards to just being the largest by volume in the complex, with about 177 underground storage tanks that have radioactive waste in them, anywhere from a kind of a peanut butter consistency to a sludge to dry material, and they all have to be cleaned up. DOE's got that legacy, and it's got plans for it. It's about 56 million gallons of waste, and where they are is they're building a waste treatment plant, what they call the WTP, which is a vitrification plant. And they also have what they call a DF-LAW plant, which is direct feed low activity waste plant. And so in other words, the really hot stuff will go to WTP, and the not so hot stuff will go to DF-LAW. Both those plants are in construction. They have been since around 2000. I think they've spent $15 billion on it. And both those plants will use vitrification as a technology. What they do with vitrification is they basically melt it with the waste with some additive, and turn it into a glass form, much like obsidian, the mineral. Put it in canisters, which is the most stable waste form, and then they'll store it for later disposal. It's very expensive to do that, but it is very technologically safe, and durable, and but very, very expensive. And what we are offering DOE is a supplement to that program. Again, that program has been going on, as I mentioned, $15 billion since the year 2000. Our supplement is very simple, very inexpensive, and it's to grout the waste. We have a proprietary approach to taking that waste and putting an additive in it, solidifying it, and then to the point where it reacts with the waste, stabilizes it, and puts it in a form that's acceptable at a landfill in Southwest Texas. And the whole life cycles and that whole technology approach is what we call TBI, Test Bed Initiative. And we basically worked with DOE and Congress to fund it. Congress funded it at about $20 million 4 or 5 years ago. And we got rolling. They added $10 million in 2020 as a line item for the federal budget. And that's where we are right now. We're in the second phase. We did 3 gallons of waste, the first 3 gallons that's ever been treated on those tanks. And it worked just fine. And we shipped the waste to Texas just as planned. The next phase, which is phase 2, is 2,000 gallons. And they'll remove that from right now from a tank, hopefully in the summer. And we'll treat that for disposal as well. And then the third phase is 300,000 gallons. And we're hoping that will come shortly after the 2,000 this summer. There may be a couple of quarters between them while they get through some regulatory hurdles, but we're optimistic that once we get going and show that we can do this and do it cheaply and safely and within compliance with the requirements, that it'll provide a supplement to the waste treatment plants that I mentioned for vitrification. So we're not trying to say that there's not room for both in this situation. We're basically providing a much lower cost option that's very safe and can start tomorrow if it's DOE gets through their regulatory hurdles and can provide the waste to us. So it's a transformative initiative for us. Right now, we can do about 300,000 gallons a year, and we can scale that up to as much as they can send us into the millions. I can't get into numbers in regards to price per gallon, but it would be about a tenth of what the WTT plant will be for based on their GAO report, and they were right around $1,100 a gallon. So you can do the math. It's a lot cheaper, and there's a lot of advantages to it, but a lot of politics around it as well. And that's what we've been fighting through the last couple of years. And hopefully 2022 will be the year where we break out and really get rolling with it.
Yeah, and what's kind of what makes you think, because it does seem, I mean, there's stuff out there I've seen in the public domain, they're moving forward, like they have this 90-day comment period and so forth. So I do see that they're moving forward. What do you see, like, because you obviously know this a lot better than me, but so what do you see that makes you think, be more confident that this is actually going to happen now?
What it comes down to is they're spending a couple billion dollars a year on the cleanup program out here at Hanford, and they've got to start making some progress and clean this place up over the next 75 years. And the DF-Law plant, which is going to take the waste that we would take, the lower activity waste, there's a portion, about 20%, that's the high level waste that has to go to the waste treatment plant. But the other 80% can come to us, as well as the DF-Law facility. And the DF-Law facility is only designed to do about 40% of that waste, of that 80%, and at about 1 million gallons a year. So if you do the math in regards to how much waste it can do, it's not going to be able to do a significant portion of that over the next several decades. Right. So a supplement is necessary, and they recognize, DOE recognizes that, and it certainly makes sense to do both. And their DOE's goal is to get DF-Law up and running first, and not distract from it, and we certainly respect that. DOE is our biggest client. We have a lot of respect for them and their vision, but hopefully we'll be able to see us get through this test phase and demonstrate just how smooth and how cost efficient grouting can be. It's been our technology is recognized. The grouting technology is recognized by the National Academy of Sciences and GAO and IG and even EPA as a very important alternative to making glass out of it, and certainly recognize the fact that it can be done. So DOE just has to get through the process at this point.
Mm-hmm. Now, the stuff that I've seen from like the Washington State Department of Ecology, it's saying that the phase 3 would actually be 500,000 gallons.
Yeah, 300. I'm pretty sure 300,000 is the number. It could be just a mistake in that, but I'm pretty sure it was 300,000. But the bottom line is this: is when we get to phase 3, the spigot will be on, and it'll be as fast as they can get it to us, and we'll be rolling. So really, phase 3 is irrespective of what may be written with 300,000 or 500,000. What that really is an operational phase.
Oh, okay.
Yeah, and so once we get to that point, we'll demonstrate that we can safely do large volumes on a production basis, and then once we show that, then we'll just keep going. And the regulatory documents that we'll have in place will support that. So,
oh, sorry, didn't mean to interrupt.
No, that's okay.
It sounds like the capital raise you did not too long ago was to expand that capacity. Is that correct?
It was to expand that capacity as well as some of the other treatment technologies we've got in play, to expand our capabilities in Oak Ridge, as well as TBI, what we call TBI, which is not an immediate need because we're still maybe 18 months away, but we do need to do some expansion in regards to the production level capabilities. Right now, today, we could do 300,000 gallons a year. Our permits support it and our facilities support it. But as we get closer to, 30, 40,000 gallons a month, we got to have everything in place to keep it rolling. We don't want to have to wait to expand. We want to be able to take all they can get us. So we'll start that's scaling up next summer, most likely, once things get rolling,
Right.
and make sure we're prepared for it.
And it sounds like it'd be fairly inexpensive. I think you had mentioned $3-4 million in total to expand up to where you could do several million gallons.
That's correct. Yeah. And
Nice.
it scales up pretty well. It scales up very well. And our facilities out here, if you just look at our facility online, it's very spread out. It's 40 some acres, and we have lots of facility space dedicated for this, where we could do several million gallons without building any new facilities and just outfitting what we've got. So the facility is really designed to do just this kind of thing. It's got a rail spur on it, so we could load our waste up on a rail and rail it down to Texas to cut costs and shipping. It's very well suited for this project. Yeah,
and it's only what, 30 miles or something from Hanford?
The actual tanks. Yeah, from the tanks.
Yeah.
So we're not, we can see the Hanford facility from here, but it's in the tanks are in the center of their facility, which is enormous. I can't remember the number of acres.
Yeah.
So it is about 30 miles.
And I mean, I guess from what I'm seeing, the alternative, I mean, would be, besides for them to take forever, would be for them to actually have to put this hazardous waste on the highways and send it out elsewhere if they didn't send it to your Washington facility.
The alternatives, as far as a commercial facility, if they didn't do it on site, they would have to do exactly what you said. There's nobody with a permit or a facility that could do that locally. So you would have to ship, and those alternatives are defined in the EA and the WIR as for consideration. You would have to ship the liquid to either Energy Solutions in Utah or WCS in Texas to do the grouting. So it's certainly much safer environmentally and more practical to do it here, solidify it, and then you'll be able to ship it on a train. But certainly much safer to transport it as a solid than a liquid. Yeah,
Yeah, for sure. Okay, I think that's all. I did have some question that came in here for me to ask you. Going back to the submarines, yeah, how long would it take you on, say, that $40 million project? How long does that work take? Is that a year? Something you can be done in a few months? Is it a couple of years? What's that look like?
Yeah, the ship that we're doing, which is called the Ex McKee, used to be USS McKee, but they designate it as the Ex McKee when they decommission it. It's about an 18-month job. It's actually 600 days. It's a 600-day job. So that's pretty standard. All these jobs are different, but 2 years or less is a pretty typical time frame to do a ship like that. Obviously, an aircraft carrier, what it really depends on, Aaron, to answer your question specifically, it depends on what the future use of that ship is. If they're going to scrap it, it's one thing. If they're going to use it for target practice, which I understand is frequently done, that's another. And sometimes they sink them and make reefs out of them, and that's a different approach. So it depends on how much you can clean it up, whether you can get to everything to free release it. And if you can, then you'll probably scrap it. But if you can only get to a certain level, then you're going to have to do something else with it, so it's not in the public domain. So it all depends on how clean you have to get it.
Okay, are there any, Mark, anything that you think that we should know about it, or you want to tell us about any big projects in terms of that we haven't covered? I think
we have lots of initiatives going on at one time. Expansion of our technology, new technologies we're developing right now and doing the R&D on. Lots of bids that we're bidding on, and I think what I've tried to say through the downturn in COVID, which was extremely frustrating for us because we were doing so well leading up to it, is that what we've been able to do is hire really good people and leaders in our industry and build a good working environment. And that's what we've been able to maintain through COVID. So that's why we're very confident that we may take a hiccup. We may not break out of this as fast as we'd like, but we've got the foundation of what we need. We have good reputation, good people. We have good project descriptions, which are important on our bids. In other words, good client references. We have great technology base that nobody else has. And what we tell our clients all the time is that we'll make the investment as a company to treat your waste. And no one else does that. In other words, we'll design a treatment approach, get the permits necessary, and do a turnkey approach to taking that liability off our hands and disposing of it. And that's a real unique offering. And I think that if as long as the government gets back in action here in the near term and gets back their offices and starts the procurement processes back the way they normally go, and using the money that Congress has appropriated, that we'll be back to the growth curve that we were on before. And hopefully that'll be through 2022.
Yeah. Another question came in. With the margins on Hanford Site, would that be more in line with your treatment margins around that, I think you said 70% range?
It may be a little less than that because the volumes will be so high, but generally close. If you're doing several million gallons a year, one would assume that you're probably going to have to lower your margins a little bit.
Sure.
So they may come down some, but not dramatically. Maybe closer to 50, but certainly above 50.
Excellent. All right. Well, thank you so much for your time. We appreciate it.
We appreciate it, Aaron. If you have any other questions, talk to our investor relations lead, or we'd be happy to set up a discussion.
Yeah, excellent. Thank you so much. I appreciate it. Hope you have a good evening.
Thank you, Aaron.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers, not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor. No one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.